Oh no, I was muted. Ladies and gentlemen, welcome to a tech frenzy. We're already off to a great start. All right. Today, I want to talk about SoFi. Robinhood has some interesting news. And then, if we can, I'd just like to talk about where I am with PayPal because obviously they have earnings coming up and there hasn't really been a lot of news on PayPal. So it's sort of been a dark period, or sorry, just like a quiet period for um, PayPal, not necessarily bad, just sort of, you know, we're in the dark, and so I want to sort of talk about that, and then we can wrap it up from there. There's also about a uh, probably 6 minute long video that I potentially could show you guys on Robinhood that I thought was quite interesting, but we'll leave that to the back half if potentially possible. But why don't we get started with a couple of the different stories here? Um, let's go with Robinhood first of all. Big product release that's been slowly rolling out over the last week, but officially announced today, which I think is very interesting because the news has just kind of been broken now. But the futures trading platform, the quote unquote trading ladder that they have created, which I think is unbelievably revolutionary. I think that people are going to love this product, getting, sort of hands on experience with it at their Robinhood Summit in Miami was fantastic. It works seamless. I think a lot of people are really going to like this, but these products are now being rolled out. So if you guys are Robinhood members, you know, take advantage if you guys are interested in futures. Now, mind you, there's a lot of extra risk with futures and a margin play that is also included onto that, levered positions. But we have to understand the size of this overall market. One, Vlad Tenev has already expressed that he thinks that this is a 9-figure new business line that they just created. Okay. Two, they have a very intuitive platform here that they think that they can scale and potentially might even break into a larger market size than what people originally thought. What I mean by this is that Robinhood, whenever rolling out options trading, was a certain size. They thought that they were going to scale it to. But then by the time we're at here seeing Q4 2024 numbers, it's much larger than they ever thought that it was going to get to because the retail trading audience for options has grown since they've released it due to them actually releasing a product that was much more intuitive to than what the incumbents had for retail traders that came before them. So Robinhood obviously is going to see, in my opinion, some benefits from their type of really high-end product design that their users really like, and that will actually bring up the total addressable market for the entire industry. Now, like I said, this is a 24-hour, sort of a 24/5 product. Okay. There's a margin side of this that's also attached. So they'll also have additional products that they'll need to work with whenever getting onto futures. And then if you also have a derivatives account with Robinhood, this opens you up to some event contracts and other potential products that they could also get into in derivative markets, which are unbelievably massive. All right. But yeah, let's see here. Uh, another interesting thing that maybe we can get into, but yeah, Vlad Tenev ended up writing an op-ed in the Washington Post today talking about how, we need to start looking at crypto a different way, and that he is an unbelievable sort of supporter or believer of real world assets in crypto, and that Robinhood wants to be there to help them, but they also need regulation to sort of get out of the way or potentially even help them get there. But right now, it's just sort of stopping businesses from working within this field and trying to make some technological improvements there. So, very interesting, but we won't go through the actual Washington Post article here. It's also extremely long. Okay, let's jump into some SoFi discussions after Q4 earnings. Now, one thing I had Timothy Sweeney on yesterday That was a lot of fun. However, there were some technical difficulties at the start of the stream. Well, start went on for like 25 minutes, but after that, we ended up clearing it up. So if anyone saw that and thought that it potentially went on for the full hour and a half, it didn't. It actually got fixed, but that was a little technical issue. But there are a couple of things that I wanted to highlight. It's some things that Wall Street did, and then also stuff that data-driven investing also showed off, which I think is really unique, and I want to highlight for you guys as well. But let's take a look at Wall Street first of all, because there's been a flurry of new upgrades and relooks at this business. So the only person that sort of stands out as standing their ground is Timothy Switzer right here, $8 on the stock. Sell rating expects the company to fall essentially 50%, get cut in half. They have not moved that. Okay. Doesn't matter how much this company grows, how much more diversified they get, all the different partners that they're bringing on, the Blue Owl Capital $5 billion deal, they expected it all. Okay. Still $8 price target. It's mind blowing to me. Essentially, every time that they hold that at 8 and SoFi actually does change in valuation, they think that SoFi is a worse off business from where they thought it was quarters ago. Okay. On the other hand, you see everyone else, potentially even like Mike Ng here, who doesn't necessarily believe in SoFi, but still does see that Q4 was a very positive quarter and that there was upgrades necessary. You see this here as well. $10.50 goes up to 14. He still doesn't think that SoFi is of its value, but it's a much better improvement, $3.50 increase from where we were just last quarter. Okay, and this is sort of the storyline that's continuously holding up as quarters go along. You see $13 going to 20, $16 going to 20, 10 going to 14, and so John held up his $19 price target, but what's it called? Andrew Jeffries here, which actually they don't show a price target, which is a shame because he had a range of a price target that was $26 to $35 per share. Would have by far been the highest on Wall Street here, but ended up not showing off his numbers. What I would love is for him to come out, not only say that publicly, but also reiterate to see what your price target is after Q4. That would be very nice of them to say that. But yeah, across the board upgrades. No one brought their price down after Q4. No one got worried about 2025 guidance. However, it's overall looking like a positive quarter. I mean, it's not overall looking. It was a positive quarter. It's just from Wall Street's perspective, I thought that they were going to pick us apart for 2025 guidance, and it doesn't seem like that's the case, which is a very nice sign. How's everybody doing? Lisa, Paul, Andrew. How you guys doing? Tanner, SoFi is in the teens. Lose the Kmart shirt from 97. It's a baseball tee. I just wear things without logos. We don't even have Kmart here in Canada, okay? That's your American language coming through. Okay, let's jump into some other stuff here. So what was also very interesting was after SoFi reported their earnings, LendingClub then showed off their numbers. Now, there wasn't anything too staggering in terms of, what they showed off. It wasn't terribly bad. It was just for what was once a growth company is now so clearly just a regular lending business with zero moat, in my opinion. And that is an important sort of distinction. So let's go ahead and take a look at LendingClub here. And you can see how they sort of fared after today, going through an entire day of trading. Going along, company was doing just fine, right? And most recently, yesterday, big collapse in the stock, actually down in 23% at one point today or yesterday, which was very interesting. SoFi, on the other hand, also still selling off, but Uh, People are trying to sort of separate whether this is all their own earnings or if there's a potential, mix in there with the DeepSeek news, the overall broader market sell-off. I think it's definitely more favored towards a loan or a SoFi problem in sentiment, and that could be due to the tech platform being much worse off than people thought it was going to be at this point of the year. Like I think by Q4 of 2024, people thought that there was going to be more growth than what there was. That was definitely a disappointment. But you know, they Anthony Noto has kind of come out and said, "Hey, we were completely wrong. The incumbent financial institutions are much slower than we thought." Which, to some degree, if you're also playing the side of the bank, must be a little bit helpful knowing just like literally how slow your competitors are. Might not be terribly bad. I know a couple of engineers who went to LendingClub and then they quit within 6 months because the tech was non-existent. Well, that is seemingly the case. And what's so funny is if you actually look back at 2021 and 2022, LendingClub was looked at quite favorably, and actually looked at quite favorably from Wall Street as well. But you can kind of see the difference between LendingClub and SoFi here so greatly. Now, whenever LendingClub was dropping their originations, which they're the green bars here, according to data driven investing, they were actually showing that, oh, we actually see a really potential hard landing or a recession or a weak consumer. We're worried. Okay. It's not that we don't have capital, we have capital, but we are a little bit worried here. So we need to slow down. Okay. SoFi said, nope, full steam ahead. Okay. And now, in a time where it's looking favorable for both businesses, LendingClub almost can't seem to reaccelerate. Okay. Well, SoFi never quite lost that steam. And so they continue to barrel forward, which now you can see the difference there. In the matter of 2 years or so, or potentially let's go even just one quarter further, these massive green bars were showing that LendingClub was the real lending or originator of loans here. And then now, just completely dwarfing LendingClub's ability to generate loans. In fact, SoFi, according to DDI, actually ended up selling more loans, way more loans, 50% more loans than LendingClub could even originate. Okay. Let alone the amount of loans that had gone through their own prepayment or not even prepayment, just payment, right? And as well as sold loans and ones that we grew because the balance sheet has grown. Although the capital ratios potentially have not changed or changed just very slightly this quarter, the tangible book value grew quite well, right? So if you actually look at the size of our book, it still did grow, and yet we are just beating LendingClub at every point. So this is what really shows why SoFi deserves such a premium, is because it's not about this quarter, about us having 50% more loans sold than they originated. It's about, okay, this is what they did over 2 years. You caught up that fast? Okay, what if we throw 5 more years at this? What is the separation just going to continue sort of in this direction where SoFi's execution just gets wider and wider? And that's only on the lending point. Once you add in financial services or any other forms of revenue for them, it just shows a much wider range. The thing that LendingClub is strongest at is what data-driven investing was just showing off, which is personal loans. And we are destroying them in that. Okay, so they had a massive sell-off because I think people are starting to realize like, oh, wow, okay, the growth is really going down to a very flat rate. They are doing what SoFi is doing as well, assuming very, you know, not risky, just conservative guidance for 2025. But, at some point, people were looking at LendingClub as a potential tech or growth company in the lending range or in the lending area. Okay, let's see here. I think next year SoFi will become a $10 trillion company. um, let's see. Yeah. Why is there talk about buying Moneyline? Or is that just this one person? SoFi can't buy Moneyline? Why would we want to buy Moneyline? I don't actually like the business uh of Moneyline at all. I find it very predatory. Even if they could get those companies on the cheap, like Moneyline or Dave or some of these businesses, what's the point of having them? Um, SoFi might go to 25 in 2025 if prospects for 2025 hold up, you reckon? Well, I think, like, personally, I think that we're probably going to beat on revenue every quarter in 2025 by probably somewhere around $100 million. Like, they're saying 3.2 million or 3.2 billion. That's blowing people away. I see a way that we get to 3.6 billion. I see a way that we easily get into the 30-cent ranges of EPS. I have not changed my guide one bit. You know, yeah, I don't want money line at all. By the way, someone you said, are you at all bored with SoFi? I don't know what you mean by bored. This is I don't invest based on boredom. I like holding companies for years and years and years and judge them based on that. Do I like talking about them as much as I do? I mean, I wish some of my other conversations would do as well, but also there's some sort of obligation on my end to uh, give the people what they want, you know? So, yeah, Warren Buffett style investor, I would just call that investing. The only thing is would be the difference of he invests in, uh, a lot of like value companies, and I'm very anti value investing. I really like growth investing, and it's pretty easy reason why. I just growth investing has outperformed value investing for 20 plus years now. Technology has changed the way uh, investing should be looked at least from my opinion. And um, so I don't like the Warren Buffett approach. I guess to some degree, a lot of people look at him as being the patient investor. But there's a lot of patient investors, right? And I think that you can do both. I think that you can look at Google and Amazon and Nvidia and Tesla, and also want to be patient for the next 10 plus years and just let good management do good management things. Um, do I mainly stay in small to mid cap? No, no. I'd say I almost never touch small cap, uh, and I'm pretty in the large to mega cap companies. Even medium, not very often. So you got to remember, like, small cap is really small. Like, you're looking at $2 billion companies. I don't do that. And then as you get further, it's like a large cap company is like 50 billion, which back then was fine, or like a ton. But there's a lot of companies between 50 and 200 billion that that have such huge growth prospects. And then 200 plus is more mega cap. But we really should have sizes that go even beyond, um, break the 200 plus, and because I think there's good segments for those as well. How many more views do your SoFi videos get versus other ones? Well, I mean, it's hard to know. Um, 10 out of the Mag 7, which ones are you most bullish on? I don't know. I'm a fan of a lot of them right now, actually. I'm a big fan of Amazon, building a position in Google. Nvidia is obviously my largest position in my portfolio. But there are some concerns there. What I don't like, and I've been talking with Amit and like on his channel and everything, and a lot of people, whenever they say, "Oh, well, how do you feel about that?" and I say, "I don't know." And people say, "Well, how do you not know? Like, this is your biggest position." I think like people who like between the days where Nvidia had fallen nearly 20% and then recovered 8+% the next day, there was no new news given, essentially. Not ones that I found material. But sentiment changed. But I wanted to see, okay, well, what are all the big tech companies going to say? And so far, we saw Meta come out and they said, hey, this is going to take hundreds of billions of dollars of infrastructure continuingly. So that's all NVIDIA. Tesla said a very similar thing. But they both of those companies also highlighted one, that their current chips are going to last longer than they originally anticipated in this market. And then two, that training costs are falling off a cliff. So, and both can be true, but the market didn't like that. And I'm very positive NVIDIA. I think that if you listen to any of the large CEOs, you'll realize the place where they want to get for AI deployment is decimal points down the line of under 1% of where we are now from where they're going to get before. Like this is 1,000x, 10,000x, 100,000x where they want to get to in the future. Okay. In the meantime, though, you're probably going to see 100x improvement on training costs. Okay. It already has improved so much. Google even said in the last 18 months, they've improved their, cost per query on their Gemini by like 95%. Improved it, brought it down by 95%. So they improved it by a 20x, essentially. So the scale is so big, and trying to find out where we are going forward is hard, but I'm still very bullish. Haven't sold a share. On the other term, listening to Tesla, I got very bullish today. I think that we're in a breakout zone on like their ability to train autonomous vehicles. We have to look at it from miles between disengagements. Not only are they getting more cars, which are little bots that are going to, or let's say little nodes that are going to be doing their own training. Okay. And then the more nodes that they have that are training out there, getting miles, are feeding back into the system, giving more data. And then they can parse through that data, find the times when disengagement was needed, humans taking away that, putting hands on the steering wheel and stopping the robot from creating some sort of disaster. And those are getting few and far between. Now, between the times of like 2019 and 2023, the improvements kind of did this of miles between disengagements. And since the transformer, which is what created ChatGPT 3.0 and then 3.5, which everyone really got accustomed to. The ability of these new models is what's able to parse through this data much faster than they've ever been able to. And so we've gone like this in miles between disengagements. And now over the last 12, 18 months, it's just gone bang, like straight up. And so this is what I'm really excited about. And I think the timeline that people thought for full self-driving went from 10, 15 years to now a lot of people thinking, okay, well, this is going to be global in 5. And that's really interesting. Yeah, so transformers have been around for a long time. Ilya has talked about it for a really long time, but they discarded it. They didn't think that that was going to be the way that AI saw its big breakthrough. So they stopped there. Like a lot of the investment in Transformer as we know it was sort of abandoned. And people were trying to find a way to get to artificial intelligence through other means. But then they went back to it because they saw more breakthroughs and everything like this. But it wasn't necessarily I agree with you. Who said that? Julio, that it was from before. I'm aware of the Deep Mind Go documentary as well. Tanner, do you have any answers as to why the member growth guidance is so low? Growth should lead to 800K members a quarter, right? I mean, I think it will. I just think that's SoFi. That's what SoFi does. They said 2.3 million members at the end of 2024. We got nearly 2.6. Okay, so it will be higher than what they have said. I just don't think that they want to. They don't want to do what Elon's doing, which has a chance of being wrong. It seems like Anthony Noto sets himself goals that they can always achieve. And I don't like that. Why be easy on yourself? Yeah, they predicted 5% unemployment, 1 to 2% growth in GDP, 1.5 rate cuts. There was another really crazy one. But yeah, it's like, it's just all the most bearish possibilities. 1 to 2% GDP growth. Well, I don't wish Anthony Noto was more of a go-getter. I mean, he is. I just don't think. I'm sure internally they have their own objectives that they want to hit. They just don't share them publicly. And there's some things that I don't like about the business and the way that they communicate with their investors. Like the way that you're going to share the Blue Owl Capital deal is not even in your press release. Okay. In the earnings call on one quarter. Dude, drop a press release on that. That's bigger than any deal you've ever done. And you're going to slip it in there? What are you doing? Like, what are you doing? You know, do you want good press on your company? That's crazy. If, like, I get it. If there's an NDA or well, I don't know if they would be considered NDA, but like something that would be stopping you from talking publicly about these deals, fine. You can't talk about tech deals. You can't bring up the names. Fine. But that's clearly not the case for Blue Owl Capital. You said who it was, how much it was, and the terms of the deal. Okay? Put a press release out. That's crazy to me. They should have done that in Fortress, and the market would have just been like, oh my God, they're getting deal after deal after deal. Like, this is crazy. It's been 3 months and they've signed nearly $8 billion worth of forward purchase agreements. The market would have lost its mind. Good companies always end up figuring out those press releases. You act like the big companies are like a large, like, I don't know, they're almost a $20 billion business. You don't know how to figure out a newsletter or a press release? Come on. Um, Internal targets are definitely not the same as the guide for the street. Yeah, those are never the case. Never the case. I'm pretty sure the Blue Owl Capital deal is finalized. What's up, Matt Flo? Good to see you, man. I like Seth here. Talk some Nubank. Make me laugh. Go. There's nothing to talk about. They're growing. They're growing. They're doing great. See, sometimes I don't talk about businesses and people think that I've sold them. Like even PayPal. I wanted to talk on PayPal for a second, but there still is no news. There really has not been anything to really cover. So, like I can show you here. These are great things that they're doing. PayPal Ventures is investing in different companies. Maybe PayPal is helping out with the LA fires. Okay. But these aren't news pieces for me. Now, what is a news piece and what I potentially wanted to talk about was a couple of my expectations for Q4 of 2024. So let me show you what I'm seeing and then maybe discuss this, because the expectations for Q4 of 2024 are still meh. Single digit revenue growth rates. But from what I'm seeing on website traffic, it just seems like there's going to be so much more growth than this. I don't know. I find it very hard to believe. So if we go here, let's show this. This is PayPal's website traffic over the last year or so. And in December of last year, we went from 476 million visits to PayPal, which a lot of the time can be the traffic that we go from, like one, it's holiday spend. So even December, let's even drag this out even more. We'll get a little bit more detail here. So both November and December, you're usually very high because this is holiday spending months. But comparatively to PayPal of this November and December, it's nothing even close. And PayPal's pretty often tracked well, because whenever you're going to buy something online, PayPal or these companies, whenever you hit the PayPal button, will take you to the PayPal checkout website. It'll pull you to another web address. Okay. So a lot of the times I find that there's accurate tracking here, but I just haven't seen much from them. Their guidance doesn't align with what I'm seeing here over the last 3 months. All 3 months of the quarter have all been 500 million visits plus. This seems like it's going to be a very high quarter, but it doesn't align with commentary. And honestly, if Jamie or Alex have something to brag about, they usually say it. So I'm a little bit off on this one. It's hard for me to sort of put any guidance towards what I'm expecting from them, but we monitor, and I'm still holding. But just because I don't talk about a business doesn't mean that I've sold it. Is SoFi's user growth of concern to you at all? No, not at all. That's like one of the best things that I find about SoFi's business. I called for in my 2025 expectations for the business. I said, 3 million users plus is probably what we're going to see in 2025. And that would be unbelievable. Okay. That's what they're going to get. They will get 3 million plus this year. Connor, if I hold shares of PayPal, I'm bullish on it. I'm bullish on the stock going up. Is SoFi user growth of concern? No. 3 to 4 million new users per year? No. Yeah, I mean, you got to think about it. Like, we have 10 million users and we're going to add 3. So we're going to go from 10 to 13 million users year over year. That's exceptional. If you can then, like, there are things that are going to make SoFi stock pump even more. If you can get products per user up, if you can get average revenue per user up, if you can get costs down, so margins continue to expand, which they are, by the way, these are all unbelievable. What I really like is, Robinhood said, okay, we are going to spend $100 million extra dollars this year and focus on growth rather than being conservative. That's what they said. And the stock went from 15 up to 50. And they saw way more growth than what I think the street was expecting. And now SoFi is saying, hey, we're going to go growth on this year. We are not going to be worrying about EPS targets. We're going to be having growth targets, which, whether that is looked at from a product perspective, member perspective, revenue perspective, but it's just not looked at from a bottom line perspective. Okay, so there might be some margin compression, but we want to see overall top line revenue growth. That's very interesting. What can SoFi do in a growth on perspective? Last time they did that, which to me was 2020 essentially, this was the biggest name in SPACs. Like, this was an unbelievable growth story. Even like before they were public, they were growing hundreds of percents year over year. Let's see. MD says, I love the credit card as well. Well, you got 2 more credit cards coming, so hopefully you like the other ones as well. I actually don't think you can get the other ones if you have the original, but there is a pickup in new credit card growth. Mari says, I haven't been able to get the credit card yet. Yeah, maybe not the 2% one, but if your credit's low, maybe you can get the Essentials card. Connor says 2 more cards. You guys don't know? SoFi, instead of the unlimited 2% credit card, had unveiled 2 other cards, the Everyday Cash Rewards card and the Essentials card. New credit card. All right. Unlimited 3% cash back on dining, 2% on groceries, and 1% on everything else. The Essentials card's a little different. This is more for people with little to no credit history. Not low credit, just less credit history. So, no real annual fees or anything along those lines, but not much on the reward side either, but help you build credit. Yeah, so those 2 cards came out and then they didn't even release them. Like, we found out about them pretty early on, but they were invite only. Only now are they really rolling them out. Oh, you just helped me think about what I hate about SoFi. I hate that they keep dropping the savings rate. Yeah, but the Fed funds rate's going down, so they're actually keeping it up pretty well. But find a bank that's not lowering them. Hey, Tanner, where does Noto's bonus money come from? What do you mean? Do you mean who's paying the 290 million? Is that what you're saying? Or are you saying, like, how does he end up unlocking it? Daniel said, yeah. I gave you two options. He said, yeah. It's paid out by the stock. They issue new shares of stock to offer him, so it dilutes the company, which is bad for you and I. But he only gets paid out if the stock is at a very high price. So, yeah, you would get diluted the entire business, potentially upwards of $290 million to pay Noto. And in the meantime, the stock will have gone up to, what would that be? Uh, 50 billion, something like that. 60 billion. So 290 million for 60 billion sounds like a good trade. Yeah, yeah, exactly. You can go from $15 a share up to 45, a triple, easy triple, and you lose a little bit off the back end from shares going to Noto. I'll take the triple. Does having no physical branches hurt SoFi due to less brand awareness? Well, I mean, yes, there is less brand awareness, but to what cost are you paying to have those branches? You know, I think that they're extremely costly. Non-investment advice, but I'm waiting on Noto to invest again. Yeah. Let's see what else in the news that we have. Coinbase said that they got approval to launch in Argentina. I thought that this was a pretty good story because not only does it show appetite for expanding, crypto markets, but it also shows that Argentina is quite a market open for new financial institutions, and that this massive deregulation that they're potentially getting into right now due to Javier Milei is leading to broader adoption and invitations for more businesses to come in. What does this mean? Well, if you guys know, Argentina is a big hotspot for potential new Latin American fintechs. So someone asked me for a little bit of commentary on Nubank. Hopefully, Nubank gets into Argentina quite shortly. It's an area that, in fact, they actually bought an office in and put, I think, 50 employees or something like this, and tried to get into that area in 2019. And then they had a pretty bad relationship with the standing government at the time and removed themselves from the situation. No more issue potentially. Maybe you can come back. Who knows? They have expressed their own interest in going there, by the way. Yeah, the NU, the new government. Yeah. But that is not a story on Nubank getting into Argentina. That's just Coinbase getting into Argentina for the reasons that Nubank said that they'd be interested in getting into new geographies. For example, Nubank has recently expressed interest in getting into the States. And they want to do that. And one of the reasons why they said so is if regulation clears up for cryptocurrency, they'd be interested in going. Possibly El Salvador next. I think the market would be a little too small for them, to be honest. Argentina is freaking huge. Brazil's huge. Mexico's huge. And Colombia is, well, actually, it's pretty big in the Latin American scheme of things. But it's also David Velez's hometown. Like, I don't know. There's reasons for why they also could expand there. El Salvador is tiny. The United States and Argentina would be massive markets that they could get into, especially the States. I can't believe they aren't already in Argentina. I can. Their currency blows. They've had massive not deflation, sorry, inflation, which would have hurt Nubank's business. If they want to expand, they want ways for them to get into areas without currency risk. And so this is why I think they're happy to go into the States, because they can do that. And now potentially with Javier Milei's interest in United States dollars, potentially they just go in with USD accounts, like, honestly. But Nubank overall will need to expand into every single country in LATAM eventually, including El Salvador. Let's see here. So we covered SoFi, all their different price targets. All of them had gone up. There was no down pricing. There are people that have lower price targets on SoFi than where they currently are. But even then, there's a lot of bears that even improved their price targets as well. Why not Chile? Because it's not as big as Argentina. But they'll get into Chile. Chile, Peru, those are big areas too, but they're still not as big. Argentina is also very fintech forward. I think there's something like 200 and something fintechs there that have just recently opened. But yeah. So we talked SoFi price targets. We talked. Oh, this is funny, by the way. Holy, data-driven investing highlighted that LendingClub ended up selling off quite brutally. And it's funny that KBW and Wedbush had both said, hey, we want to go long LendingClub and short SoFi. Boy, oh boy, was that a terrible pick. Not only would you have lost on the LendingClub side, you would have also lost quite well on the SoFi side. The funny thing is you could have went long on SoFi, but if you even just went long on both, you would have, done so much better than even shorting either one of them. Yeah. We haven't talked Tanner Manson's SoFi price target. I don't do a lot of price targets. I mean, potentially after seeing Q4 of 2025, I could see this stock in the $30 ranges. But I don't have like what's the price by Friday close? How would I know? I don't know how anyone would know. I'm not an astronomer. I'm not gonna, tell you what the stars and the charts and the candles are saying. I don't know. I wonder how many TA guys knew that this Black Swan event was coming. Markets are crazy. Shit happens. The waves change all the time. Look out a little bit further. Stay patient. Enjoy markets. Learn, try to force yourself to love learning about business, because I think that's what makes me really interested in stocks all the time. And I'm sure you guys, also see this similarly as well, is that what keeps me very interested in learning about stocks is not that just for my own personal gain, but I find it interesting how companies are able to make money in different areas, solve different problems that potentially have not been solved. But also, like solving problems are one thing. Monetizing a problem is a completely other story. So these are just fun stories that I like to read, and I do it on my off time. So yeah. I love Tanner's reactions whenever someone asks him what the price target will be. Yeah, it's been pretty negative every time. And I'm sorry about that, but yeah. We need to put up like a disclaimer before people join the videos. So tomorrow is the course member only live streams for you guys. Well, for the course members. We usually do a breakdown of a new company. I was going to do AMD. I'm interested in doing AMD still, but I have so many thoughts about this DeepSeek effect of what this means for NVIDIA. So I don't know if we will be doing an AMD breakdown and more just talking about markets, just a heads up. So if you guys like that, please let me know. If you guys want those week sessions, if there's crazy big, sentiment changes in markets, stuff like this, that we talk about what is actually here and now, or if you want me to continue to break down a new company every single week, you know? I'm thinking Tanner doesn't like Pagaya at all. No, I don't care for them at all. I think what SoFi does is replacing Pagaya, creating their own marketplace. They don't need Pagaya. Joby making a move after hours. Um, when will you find the next stock that performs like Shift 4 immediately after you mention it? I mean, honestly, the one that performed like that for me that I find is the one that I'll never get out of my head was Nubank. I mentioned that at $3.80, and it didn't take a turnaround till it hit 15. Like it just kept going. That was a lot of fun. I'm holding AMD. I'd love your breakdown. Well, you got to be a course member. We will be doing an AMD breakdown. I've got the charts already. I've plugged all my numbers. I'm getting a really good sort of vision of this business, but it'll just potentially be a week longer or something, and I might even go to 2 a weeks because I can do these breakdowns a little bit more. Just whenever I end up like, I'll probably look to hire like a person to help me with everything. And once that happens, we can do those videos a lot more. It's just there's a lot of back end stuff for me to do as well. And it's only me. What's the too long didn't read on Nubank's recent dip from 10 to 5? Brazil uh, quantitative tightening, trying to increase rates to stop themselves from getting into a bad, or a worse macro environment. There's two camps. One, why'd you do this? And the other camp is, hey, if you're going to do this, you didn't do this big enough. So currency risk, um, just general Brazil worries if the economy slows, if like those, whenever you have a relationship with 60% of the audience, whenever you have a credit relationship with an also very large percentage of that population, those are huge concerns, right? Essentially, banks, you need to look at financial institutions of large scale like JP Morgan, Bank of America, all those guys, as just being proxies of the macro, right? If interest rates go up or down, those are their entire businesses going up or down. If people are starting to default more, have more credit risks, have all these things, those are just one-to-one affecting large banks. Have your girlfriend help you out? No, my girlfriend makes a really good living doing her own thing. She's a director at a pretty good company, so she's busy. Um, will Brazil slow down with the foundation of BRICS? No, I don't think so. She's the breadwinner. I mean, we own this house 50-50. I'd say we both can handle our own. I think that's a good way to put it. But yeah, we're not gonna. I always get a little clammy with talking finances, but it's funny. We're on a finance show. Oh, I'm really late. Yeah, Flesh, you're so late that we're leaving. Ladies and gentlemen, thank you all so much for watching. Really do appreciate your time. But subscribe, join the Discord. I'm actually in there like every single day. All right. Bye for now.